All right. Well, hello, Next Gen Nation. Welcome. You got to see a little behind the scenes work today of us getting prepared for this important session this morning. I'm Doug Mashguri, Vice President General Manager at GovLoop, and welcome to today's session, Building Strong Money Management Skills. Before we get started, we had some really awesome keynotes this morning. I hope you enjoyed kickoff of a fun day of learning, training, and engagement. I'd like to acknowledge all of our attendees here today. Thank you, thank you, thank you for joining us. For our federal folks, really appreciate it. I know this must be a challenging time for you during the shutdown. For those that are shut down, thank you for joining us. For those that are working, thank you for joining us. We hope today's session is useful for you. We appreciate the participation of our entire audience today. And let's get going. So, being financially healthy, it's a critical part of overall wellness. Whether it's having an emergency fund, saving for retirement, or having life insurance, it's critical to understand the steps you can take to safeguard yourself and your family's future. In today's session, you're going to hear key components that make up sound financial planning and strategies you can use to reach financial security. But before we do that, for those that have been to NextGen before, we have to go over a litany of housekeeping items. So let's jump into it. First of all, check out our resources tab. There's additional information there and specific to this session as well as others. Please visit our exhibit hall in the main environment. There's lots of really incredible resources to learn to get smarter on key topics. There's booths and ways to engage with our partners there. Networking, please use the lobby chat in the main environment, the chat in this webinar. A lot of today is about engagement and discussion and networking, so please feel free to use that. If you have questions, use the Q&A tab or chat tab at the bottom of your console. The Q&A tab is also where you can submit technical questions. We hope you do not have any, but if you do, please put them in there, and my associate Kelly will help you figure those out. Lastly, the on-demand version of this will be available to you. You'll receive an email tomorrow from us to get access to it. So if for some reason you'd have to leave early or for a later session you can't make today, just know that by registering today, you will receive a on-demand version of these wonderful sessions. CPEs. I'm going to read this off my script because I always mess this up. The beauty is you can receive one CPE for attending today's session. Three simple steps to do this. One, attend this online training for the full duration, so stay on all time. Number two, there'll be three polls peppered throughout today's presentation. Please take the poll. You'll see the poll question pop up. You'll be able to respond to it. If you take all three, you're eligible for the CPE. And then lastly, complete the evaluation at the conclusion of this. That evaluation form can be found in the resource module on this training and in the resource center in the main environment. All right, well, let's get on with the show. We have two great speakers today. We have Tony Zerante, he's a Chief Strategy Officer with WAEPA, and Gabe Collins, Senior Partner and Chief Revenue Officer with EngageIT Pro. Gentlemen, welcome, and thank you for joining us today.
Thank you for having us, Doug. Appreciate it.
Hey,
Yeah, thank you both for having us on and looking forward to it.
excellent. Well, let's jump into it. I think we need to open up with the reality we're all facing today and what's happening on the ground. There's a government shutdown going on. There's a lot of financial stress on a big portion of our federal audience right now. What are some of the strategies employees can harness to help us at this current time?
Yeah. Doug, I'll start on this one. And we also understand, right, that a lot of state and local employees are indirectly or directly affected by the shutdown too, right? Because a lot of these groups, they rely on grants from federal government to put things through. The states and the federal government work hand in hand with and on a lot of projects as well. So the pain is certainly directly felt by federal employees, but state and local, we completely understand and appreciate the fact that there's a lot of stress on you all as well, right? You're having to do some heavy lifts that you maybe didn't plan on doing, or you're going to have help with, and now you're either waiting for something or you're stuck doing it all yourself. So that impact really, is affecting all of us, right? Even in the private sector as well. So, having said that, I think the first thing that I would say is there are a lot of organizations out there right now that are reaching out. They are being proactive to support federal employees, in particular, during the shutdown, right? So, an example would be federal credit unions are offering a lot of no interest loans to federal employees right now. Some fairly substantial amounts, right? And Gabe and I aren't here, to promote particular organizations, of course. But having said that, take a look out there. There are a lot of options available to you. I'm local in the DC area, and even the state of Maryland is offering no interest loans to Maryland residents that are federal employees that are impacted by this shutdown. So there are some options out there that you can take advantage of if you are really cash strapped. Or if you had that safety net, but it's already been used up because something else happened, and then now you're starting to miss paychecks, then there are these other groups out there that are doing that. And WAEPA, as an example, where we offer products and services to civilian feds and former feds. Right now, we're offering a 60-day window to make your payment for your disability or term insurance, right? So normally you only have 30 days after your due date. We're now giving you 60 days. There's no interest applied or anything like that. So if you're struggling, you've got 60 days at a minimum to start right now with our organization, where you don't have to make a payment. So hopefully that's going to help some folks there. Gabe, what about from your end?
Yeah, absolutely. Kind of going off what Tony was saying, definitely taking a look at the institutions that offer those shutdown assistance programs, right? Large institutions with large federal employee customer bases often do that. And taking advantage of that is definitely something that could be useful. And really outside of that is being proactive and prioritizing those essential needs, right? Where do you need the most help? Where can you cut back? Where can you get through this? And really evaluating those priorities.
Great. Are there any central resources or good places to find this information as it it's pretty fluid right now, and I see I always get a lot of emails. Are there any resources that you look at, or websites, or any other things that you're looking at to keep up to date on what is available right now?
Yes, Doug, but unfortunately, there's no centralized location for all of this, which does make it challenging.
Yeah,
For instance, with WAEPA, we're tracking, I think right now it's 20 different potential sites, for information and updates, either about the shutdown or also about the ongoing implications of the workforce reduction programs and everything like that. And they're here, there, and everywhere, right? So, again, locally to the DC metro area, Federal News Network is a good, nonpartisan site for information,
yeah,
and things of that nature. But they're literally every website, and again, as Gabe was talking about earlier too, it's, if you need help from your mortgage provider, you got to go to the mortgage provider's website and say, okay, whoever it is, ABC mortgage provider, are you doing anything to help feds right now, or Fed adjacent folks who are also impacted? So there's no centralized location, but there are a lot of good resources out there that at least that WAEPA's found, but you do have to search around for.
great, great. All right, well, let's move forward a little bit here. Let's just talk about financial wellness in general. This is a bigger issue. It goes well beyond a shutdown into our everyday lives and planning. And we always hear about wellness. We always hear about financial health. Um, why is financial health critical to overall wellness? And why is understanding that correlation between the two so important to everybody?
Um, Doug, really, from our perspective, it's trying to eliminate one of those stressors in your life, right? So I think, we can all say, sometimes our job is really stressful. Sometimes our family, our our lives outside of work can be very stressful, right? Depending on family dynamics, kids, friends, whatever it is. That's usually where we think of when we think about, oh, we're stressed, right? It's a
Yep.
job, or I got to get the kids to 50 different practices after work, this week. But finance is a huge component of that as well, right? So imagine layering on top, I've got to go do this, or I've got this really big project at work, or I'm temporary furloughed at work. What the heck am I going to do? I know all this work is going to be there when I do go back. So you're stressing about that. But the financial side of it really is something that would go on top of it, and you don't think about it at top of mind until something happens and you're impacted, right? So you're out and about and you get in a car accident, for example, and all of a sudden you're like, I'm already stressed out, about XYZ, and now I've got to fix my car, or my car's totaled. What am I going to do? The insurance is going to pay me, but I'm not going to get a check for a couple weeks because the other person who hit me, they're dragging their feet, whatever it is. Now I got to go look for another car. Oh my gosh, well, I wasn't really expecting to replace my car. I can't afford, what I really need for myself or my family. So it's that thinking about that bigger picture and trying to relieve some of that stress that finances could have on you, and where you may not think of them top of mind, but the moment something happens on a financial side, then all of a sudden that becomes the forefront, and it really weighs on you. Gabe, what's your thoughts on this?
Yeah, and Tony, you definitely hit the nail on the head there. And for me, it's something that we've seen consistently is the impact on mental health that finances can have one way or the other, right? And as a father, new father whose son is almost 2, sleep is almost everything to me, right? And without that sense of control, that peace of mind, that doesn't come very easily, right? And the stress responses that your body has naturally to that, whether it be work, family, finances, or otherwise, is the high blood pressure, right? Everything, just like Carlos said just now, right? It can snowball, right? And it often does. And with financial wellness, something that we often see is you need to have some sort of financial wellness to maybe get access to that health care, to take care of yourself so that you can show up, be the best version of yourself for your spouse or partner, for your kids, if it applies. And having that peace of mind is really everything to a lot of people.
Got it. Thank you. Thank you. Let's move on to another area, which one of my favorite parts is always talking about kind of the financial management stumbling blocks, because these are always good reminders of things we could be thinking about, should be aware of. We know financial management is a big part of our wellness, but now let's talk about ways, of common mistakes people can make. So let's focus on, what's this one thing that folks overlook when it comes to financial management in your experience?
Gabe, you want to start on this one? Uh-oh. Now you're on mute.
No worries. Sorry. Yeah, something that I've seen, even in my own personal life, that's very, very common is the lifestyle creep, right? What does that lifestyle inflation look like? And it's a gradual process. It's not something that happens overnight with one uh, big monetary event, right? It's a gradual process where that discretionary spending increases, right? As your income increases, whether it be a raise, a promotion, bonus, whatever that is. It's whether it be, natural for humans to go ahead and do so, raising that standard of living and having former luxuries now becoming a necessity is something that we often see. And when individuals get hit or in the cycle of a shutdown, of layoffs or otherwise, many don't have the buffer, the barrier that they would have if, say, the baseline 50-30-20 rule was kind of put in place from the start. You really only upgrading your lifestyle by that 20%, that fun money that you really have available to go ahead and do so. But we see it time and time again, whether it be on a large scale or a small scale, that lifestyle creep tends to jump up when least expected.
Yeah, that's a great point, Gabe. And that kind that it's parallel to the one item that comes to me is our tendency to have a set it and forget it mentality for all of these types of things. And so I think that plays well off of what you just said. So the best example I can give, or it's two really good examples in particular, but the first example is whether you're local, state, federal, private sector, we all get an opportunity, at least once a year, to have an open season on our benefits. Right now, if we're in a big company, we might have a whole suite of products that we can choose from. If it's a smaller company, we might only get, one or two choices here or there. But the biggest thing, and something that struck me, a metric that struck me that our company talks about a little bit, and we don't even do health insurance. So this is really just trying to figure out how it works in the overall benefit, and how we can assist folks is, I think I heard somewhere that over 70% of civilian federal employees don't even look at their health insurance when it comes to open season every year. They just, this is the plan I'm in. Is the premium okay? Am I still okay with the premium? Yep, done. No further look. Um, and federal employees have the biggest suite of selection, I think, on the earth, right? I think there's 50 or 60 different health insurers for federal employees. Now, some are more localized, but I think there's at least a dozen, if not more, that are national programs, right? So anywhere you are in the U.S., you can sign up for their program. And so I think the biggest thing is really taking a look when you have those open seasons at your benefits and make adjustments there, right? So, Gabe, you just brought up a great point, and congratulations on being a new father. So as you go through and look at this with your family, you know, once you're done and you're not going to have kids anymore, we should probably take a look at the health plan that you have and say, I don't need maternity benefits anymore, right? Why would we pay for these if we literally, we're not going to have kids anymore? And that's one thing that can be a substantial cost depending on your, depending on what plan you may have. And again, you talked about it as well, Gabe. As maybe your salary hopefully does improve and your quality of life improves as well. Well, hopefully, if you're building that safety net and you're building, savings and whatnot, that you may want to look at a plan with a slightly higher deductible. And this happens a lot with property casualty, right? With your car insurance and home and in particular. If you could afford to have a slightly higher deductible, sometimes you can cut your premiums by 50, 75% if you're just willing to pay $1,000 for your deductible rather than 500 or 250 or 750. So it's really looking at that, and all of us are guilty of it to some degree, but trying to get out of that set it and forget it mindset, and especially in terms of benefits. And I'm sure we'll talk later about other options also. But that to me is the one thing is a stumbling block, Doug, that we would want to try to encourage and help folks to avoid as much as possible.
Yeah, no, thank you, Tony and Gabe. And you hear every year in open season discussion about health benefits. The worst thing you could do is ask the person sitting next to you what they're doing. Your lives are different, your needs are different. And I'm assuming that's similar with financial management planning too, which is a good segue into the next question is, as we're going to be talking about mapping financial management goals, two-part question. Where do people go wrong? And then what should these goals look like around financial management so we can get on the right path there?
Yep. The first thing that comes out to me, Doug, is and we talk about this a lot with our members to a certain degree, is what's your level of risk, and then what is your goal, right? What is your outcome, right? Is your outcome to retire at 55 and travel the world? If your goal is to retire at 65 or 67, and provide for your extended family, your kids or your grandkids or nieces or nephews that you really care about, or a charitable organization that you're very much involved with, and you want to donate more time and or money, resources to them. So it's what is your risk, right? Usually the younger we are, we're willing to take a little more risk in the markets, right? With TSP or our IRAs, 401ks, whatever it is, anything that we have that could be, construed as savings. Are we willing to be a little more risky with it there because we know we want to grow it to get to this level? But then the flip side of that is as we do age, and there's no particular date, but in your 50s and 60s certainly jumps out to me is, well, maybe if you're on track to meet your goals, you may want to de-risk a little bit of your investments, your 401ks, your TSPs, et cetera, and go with something that's a little more slightly more wealth preservation and not just wealth growth. Because if you do have something, that comes along, such as COVID, which killed the markets for a while, and then even earlier this year, with the tariff kind of standoffs for a while, the market took a big dip. Now we got it all back, which is great. So it was kind of a minimal hurt, fortunately, but that's not guaranteed to happen in the future. So kind of wealth preservation, if you're on track and you're getting there, I think is a big part. What about you, Gabe?
Yeah, I think for us, what we've seen is people can stumble on the comprehensiveness of that financial planning. We see folks sometimes get financial planning and retirement planning mixed up, or think they're one and the same, right? Retirement is definitely a big part of that and a major component, but it's also a drop in the bucket for the comprehensive financial plan that we've seen benefit individuals than more so than not. And that includes, your cash flow budgeting, debt management, insurance needs, tax planning, education. All of those things go into what that healthy financial plan looks like. And comprehensiveness for me and what I do is a large part of the successes that we've seen, right? The more granular you are on what you want, where you want to go, whether it be applying for a job or choosing your benefits, the more granular you are, the better off you're going to be, in terms of either saving money or having the right coverage or setting those goals, realistic goals. You need to have a clear picture that is encompassing of everything and not leaving certain things out of that financial plan, and setting yourself up for success.
Great, thank you. So, I mean, my takeaway here is on kind of what you should be considering. It's not a one size fits all. Understanding your level of risk at the moment in life you're in at this point, knowing that it can change over time. So, reassessing level of risk over time is important. And again, defining your goals as they are today, and then keeping track of that to make sure that your goals may change over time as your situation changes. So I really appreciate both you kind of highlighting those two key points because I think that gives us all a good foundation for kind of the planning piece. So, Gabe, you mentioned something just, things, the lingo can get mixed up, retirement planning, this type of planning can be confusing. Um, and again, this isn't a one size fits all, but where should people go for advice on financial management planning? Is there, or what should they be considering to go for advice?
I think everybody has a different solution for themselves, right? And everybody needs something different. For lack of a better term, I like to say everybody has a different boogeyman. And although confusing, we often see individuals, like you were saying, doing what the individual next to them is doing, saying, hey, this might be good for me, even though my situation is completely different. And the lingo around it can be confusing, right? Saying that, the asset allocation over here is one thing, and it's not exactly the same thing as diversification in your portfolio, right? Like, so say that you have a strategy of uh, allocating different assets in your portfolio. The diversification is expanding on those individual categories, right? And diversifying inside of those. So it is confusing, but it's really about the learning curve, right? Choosing what financial terminology you need and is important to you, and staying on that track and not getting too lost in the lingo from 12 different sites saying 12 different things about your situation.
Yeah. Great point, Gabe. Um, I go with the ultra simplified option of, if you don't understand it, then ask a question, right? Because we are not, we hopefully eventually get to be experts in our certain fields, in our careers, but there's nobody that's an expert at everything, right? And it takes years of work and practice to really become to that expert level or trusted level. You don't even have to be an expert, right? Just be someone who's trusted, well regarded. It takes time, it takes effort to get there. And we all don't know everything about everything, right? Somebody could be super tuned in on accounting, but you could be an accountant, you could be a CPA. That doesn't mean you understand about investing or other things of that nature, or employee benefits. That just means you're the best accountant that your company has ever had working for them, and you are a rock star. But that doesn't mean you're expected to know about, all these other things, that might be related to accounting, but, only because there are numbers involved, right? So never, ever, I would say, and I fall into this trap too, is always just ask, right? If you have professionals you've worked with, ask them. If you have somebody else that that's trusted, at least ask them. You can ask your neighbor. Well, who do you're talking about things with your neighbor, your cube mate, and well, this is what I do, and so just ask them, well, why do you do that? Not just, okay, that sounds like that'll work for me, like you were saying, Gabe, right? Okay, okay, that sounds reasonable. Where did you come up with that, Gabe? What made you go in that direction? And then Gabe, you sound like you're very interested in it. You'd be like, oh, well, I read this and that, or I have this advisor over here, or whatever. And then the light bulb hopefully will go off for you, so you can say, okay, I don't know what this is, but now I know who I can go talk to, or I know a resource where I can go educate myself or listen to them talk me through it. And so I know what the difference is between a Roth and a traditional IRA, or a this or a that, or whatever it is you're looking at, or all that sort of thing. So I would say don't be afraid to ask questions about people who you trust, and don't be afraid to go out and look for somebody, find somebody to trust, and then ask them those questions, because there's a lot of help out there. But much like everything else in life, we've got to ask for it. So.
Great advice and insight. So before we kind of transition into best practices and lessons learned, I'm going to launch our first poll question here. So again, folks, if you could take the poll, the question is, do you feel you have a good handle on your finances? Yes, no, somewhat. Too much is changing right now, unsure. We'll give you a little time to take that, and we'll discuss the results in a few minutes. But while you're taking that, let's talk a little bit about best practices and lessons learned, and where we are. And I do want to remind the folks, please put questions in Q&A. We'd love to hear from you, and have our experts talk to you a little bit. So best practices for a lot of government employees, there's a lot of things potentially happening right now. Layoffs, early retirements, administrative leave. If a person is in one of these positions, what should they be thinking about right now?
I'm happy to start on this one. I think the biggest thing, Doug, would be, especially if you're leaving federal service, whether you're just going to retire early or go to the private sector, or take some months off and then figure it out. Whatever your situation is make sure you have a very thorough understanding of your benefits, and which benefits continue. Which benefits may continue without you needing to pay for them, which ones you do need to make sure, and you do have some extensions, but you've got to pay for them out of pocket, right? Because you don't have a paycheck or anything else like that coming through. And then what are your benefits, such as your TSP, for federal employees? You know, that's not something that you have to pay for necessarily, and of course you won't contribute to it anymore as a non-federal employee, but that does go with you into retirement. So you need to make sure you understand what's going to happen. Are there any fees involved to manage that going forward? Um, do you want to roll it over into some other place, or do you want to leave it with the government? And again, one good piece of information I heard in talking with a colleague just a couple months ago around the TSP, ironically, was stepping out from federal service for any reason, no matter what it is, retirement, voluntary early separation, you got rift, anything else, from the good, the bad, to the ugly, is as long as you leave something in your TSP, you are always allowed to get back into it, is my understanding. And so generally, the takeaway for me was, well, don't close out your TSP and just close it all out and then roll it over, into your new job or into your, somebody else, a TD Ameritrade, whatever you're doing. If you're doing stuff online, is you might want to leave that door open as a civilian federal employee and leave a little bit in your TSP, because the TSP program can be very advantageous sometimes. As long as it's still open, you can still move funds back into that, is my understanding. So that's really the big thing for me is what are your benefits while you're either furloughed or leaving for any reason, and what go with you, what don't, what do you have to think about in the meantime, while you're kind of in this, in this unknown status. What about you,
Great.
Gabe?
Yeah, Tony, I think again, nail on the head there. I think that if a person's in one of these positions, there's a lot of different things to look at specifically for our government folks like the TSPs and how to navigate that. I think on the more broad side of things, casting a wide net here, I think that, say you're a layoff employee or you're furloughed and you're looking elsewhere, right? Because you need that next spot. You're going to have to learn how to sell your experience, right? What you've done in your career is your ammunition in getting that next role or finding the right place for you. Be honest with your skills, right? And be even more honest with your shortcomings, right? And the quicker you're able to do that, the quicker you're going to be able to get into the right rooms that you want to be in and that people want you to be in. That said, I think that by having such a granular look into your situation from having all of your ducks in a row as you're leaving and being ultra prepared for that next role, I think those are probably the two biggest things that you can focus on, regardless of the three, which one of the three that you're in.
Wonderful. Thanks, Gabe and Tony. Here's the poll results. Interesting, actually. So the question was, do you have a good handle on your finances? 70% yes, 12% no, 50% somewhat. And I think that's, I personally feel that way too. It's like, you're not sure, right? And then 18% is too much is changing right now. So this is a great result to get us to our next question. We've talked a lot about some best practice, some things to do, but let's really narrow down. Are there 2 to 3 best practices that we could share with the audience that could make that 50% move to the yes, in terms of having a handle on our finances? So, like I said, Tony and Gabe, you've both touched on a lot of different things. Let's summarize a little bit. Is there 2 to 3 things people could be doing now that they would change their answer when we ask this next quarter from somewhat to yes?
Gabe, fire away.
Yeah, I think briefly, I briefly touched on it earlier, is the 50-30-20 kind of baseline rule. It's, for financial management individuals, it's almost like a mantra, right? We hear it day in and day out. 50% of your earnings into savings, 30% into your debts, and 20% into fund money, right? Having that baseline and not exceeding it helps squash some of the instances that we talked about earlier, like the lifestyle creep, like, picking out different benefits packages that you don't necessarily need, right? That you're spending a little bit more money here and there. I think by having that baseline and sticking to it, you're able to have a pretty good head start into what that picture is going to look like a month from now, next quarter, next year, and somewhere to build off of. But Tony, please do expand on that.
Yeah, I think great point, Gabe. For me, my go-to response to this question always is if you have any debt, house, car note, credit card, whatever it is, always pay your high debt off first, unequivocally, right? Even though you owe 250,000 on your house and your credit card is only 3,000, your credit card rate is probably quadruple your house rate. And you know, if all things being equal, you're going to pay so much more in interest on that credit card if you don't get it paid off early, right? And I think a great example is, and a lot of us are probably either in one bucket or the other bucket right now. But a great example is I was fortunate to be able to refinance my house in COVID when the rates just completely tanked, right? So my house rate is 2.25%. It probably will never get that low again in my lifetime. I hope it will, because that'll help a lot of other folks out, but it probably won't, right? So I'm looking at it and I'm starting to get up there in age and, looking at the end game, and love to have my house paid off before I retire. Um, so well, maybe I should throw a little more money at the house, a little bit extra. If I've got a little bit extra, which hopefully I do, let's do that. But that would be quite honestly the wrong approach if I have any other debt, such as credit card debt right now, or for instance, I did have to get a new car to me somewhat unexpectedly a couple years ago, and that was after the rates came back up, right? So my rate for the car was 5% at the time. So of course, if I have any extra money, put it at the car first before you come back to the lower interest loan. So that's always my takeaway. My answer to that is the best practice is if you have debt, what's the highest interest rate, or what's the one that you could, if you really need that feel good moment, what's the smallest one that you could chew off and eliminate the quickest? It's between 6 and 12 months. Even if it's not the highest rate, if it's the one that's just going to make you feel really good inside, I don't have that debt anymore. Go for that quick win there, and then refocus on high interest versus low interest and things of that nature. But yeah, make your money work for you. If and the same thing I'll say is, if you do have a little bit of savings saved up, right? Right now, the interest rates, even on just CDs at most banks, are still better than that 2.25 that I'm paying on my mortgage, right? So yeah, I could take some out of savings maybe and pay my house off quicker, but I could literally make more money if I just leave it in the bank than I could paying off my house early. So make your money work for you, right? We all work so hard, in our lives, and we try and set ourselves up for the very best. And so, trying to help, we try to help you make those wise decisions on make that money go farther for you. And that would be my answer there.
Great, thank you. And there was a good question, and I think you just answered us about, it's paying off the high interest debt first, even if it's a smaller
Yep.
balance, versus larger balance, lower interest rate. So if you can
Yep.
target that, that is a path to a best practice. Thank you so much. Tony, I realized you're with WAEPA, you've been there a long time. Can you just talk a little bit how WAEPA works with federal government folks?
Sure. I'll give you, 30-second elevator pitch, really, Doug, is, WAEPA is a nonprofit. We're a C9. We were formed in 1942 for the purpose of life insurance for civilian feds who were serving literally overseas in Europe and in the Pacific during World War II. Quite honestly, most of our initial members were spies, with the OSS, the Office of Strategic Services, which is the predecessor to the CIA. So we were formed literally just to provide protection during World War II, and the intent was that was going to be it. But the war ended, and everybody started coming back home, and they said, "Well, we still need life insurance. Just because we're not living in a war zone doesn't mean we don't need life insurance." So here we are, 82 years later. So WAEPA again is a nonprofit. We're here for our members. We don't have shareholders. And what we do is we provide benefits, voluntary benefits to federal employees and former federal employees and their families. So we currently offer term life insurance and short-term disability to federal employees, and we also offer a complimentary financial wellness program through Ernst and Young, as well as some financial guides and everything on our website to try and help federal employees navigate and improve their financial wellness.
Wonderful. Thank you. Thank you. All right, let's launch our second poll question here. It is, do you have an emergency fund? Yes, no, don't want to say, unsure. Let's just talk a little about emergency funds. Tony and Gabe, the importance, is there any best practices around or guidance around emergency funds? Let's just spend a little time there.
Yeah, so the general rule of thumb, which is completely fair, very challenging to meet, is really 6 months worth of expenses, right? So mortgage, food, the things you absolutely have to have in life, right? Mortgage, food, insurance, if you have a car payment or anything else like that. 6 months is the ideal number, right? So you get blindsided by anything in life. You've got a 6 month barrier there. That is very challenging, especially in areas where the cost of living is very expensive. Completely understand that. So generally the rule of thumb would be, what if you think about another rule of thumb would be, what would happen to you if something happens to you unexpectedly, and pick out a couple scenarios. Can you cover that? And I gave the example earlier. If you're minding your own business, doing everything right, and somebody T-bones you in your car and totals your car, whatever money you end up getting for it, big, little, or in between, what can you get with that? And in the meantime, while you don't have a car, how are you going to get to your work to pick the kids up from XYZ? If you're a stay-at-home parent, whatever, anything in between, how are you going to manage that? And so that's where the emergency fund will come in and say, I get sick and my hospital copay is $1,000 for this. Hopefully you've got at least $1,000 put away, or a couple thousand, to get you by with transportation until you figure it out personally. That's where I would start. What do you think, Gabe?
Yeah, I mean, I can't personally, especially, I can't state the importance enough of an emergency fund. Switching from my last position to my current position in and of itself, emergency happened, right? Fixing up my house to sell it, and put in a dry coffee bar in the dining room, and caught the business end of a table saw and almost cut off, well, 3 fingers, right? So wasn't able to travel, speak, work to the extent that I was, and it took a toll on us, right? Because of the lifestyle creep, right? And so a lot of these things come out of nowhere, right? And obviously not expecting, an emergency room visit and surgery to put some fingertips back on. But regardless of what that situation is, having those 3, 4, 5, ideally 6 months of expenses in your pocket, you're able to keep that stress down. You're able to have that peace of mind of, okay, I'm going to be okay. Whatever happened, whoever was in that incident is going to be okay. And we're going to be able to get through this. I think that's really the biggest part of the emergency fund for me, having the experience, is that peace of mind if it's going to be okay.
Great. So good news. 61% of our folks on today's call have an emergency fund, and that's great. I there's some really good questions in the chat, just in a very tactical question, but I think a really good question. Can you consider your TSP as part of your emergency fund, or should you consider that as part of your emergency fund?
Yes, you can, but you just be aware of the consequences. And I am not a TSP pro. But having said that, again, we try and get as much knowledge to help federal employees as we can. So having said that, yes, in theory, you can do that. You can do that with 401ks also, but you have to be aware there's a loan penalty there, right? And it can be substantial. I think most of them are 10% is a penalty. So yes, you can, if your TSP or 401k is growing and you think you're doing really well to get to that retirement phase. And Gabe brought up a great point earlier. There's a difference between retirement planning and financial planning, but TSP and 401ks, those are truly, really retirement. So if you're in really good shape retirement and something does come up out of the blue, yes, you can consider it as part of your emergency fund. Just be aware that, that amount you're going to have to take out and then repay, except under extraordinary conditions, is going to have interest involved with it. And then usually, in a lot of cases, a 10% load on top of it, where you're going to get a penalty, right? So if you take out 10,000, you're only going to get 9,000 cash, when it's all said and done. And then you're going to have to start paying loan interest on it, basically immediately. But yes, it's fair to say that. Just know the ins and outs of taking an advance on any of those type of retirement accounts, because there's usually a penalty there.
Yeah, and I think too, Tony, you mentioned, a rule of thumb is 6 months of savings. However, if you can only do 1 month, it is still worth the effort. You know what I mean? Every little bit
Yes.
counts, and things will change in everyone's lives. But whatever steps you can take towards that are still as important. So if you can't do six, you can do one, still do it.
Even if you're saving for next month's electric bill,
Mm-hmm.
save it.
Save it.
Good. I have let me just find it was a really good question just came up because we talked twice about it. So before I forget, I do want to bring it up. We've talked about the difference between retirement planning and financial planning a few times today. This person I tend to lump them together, which I think a lot of us probably do. Can we take 2 minutes just to talk a little bit about differences and how we should be thinking about it? And then we'll get to the next poll question.
Go ahead, Gabe.
Oh man, yeah, I would just say really the comprehensiveness of it. What goes into a financial plan is a lot more than just retirement. It's today, tomorrow, next year. It's what happened last year, right? And how to take that and adjust and navigate for this year, right? It's a living uh plan, right? It's not just a set it and forget it thing, right? It's constantly changing, constantly evolving. And honestly, the more you can build that out with different modalities of capital, the better off you're going to be down the road. So really comprehensiveness of it is I would say my biggest differentiator.
Mm-hmm.
Yeah.
I think you hit it perfectly, Gabe. Retirement is truly, right, for your early career. When you're talking about retirement planning, that's literally 30 years away, right? So that is completely different than what was in front of you last year. You couldn't have said it better, Gabe. What was in front of you? What happened last year? What's happening today? What's going to happen tomorrow, next week, next month, next few years? Because it doesn't make any sense to put every penny away into 401k or retirement. It's admirable, but it doesn't make sense to put every single penny away there and not have an emergency fund, or not have a something else, and then, oh no, something happened. I got sick. I've got to pay my copay for the medical bills, and you didn't have anything extra on the side because you were so focused on retirement, you weren't focused on the finances you need, today or tomorrow or within the next 6 to 12 months. So I think you're right, Gabe. That's really perfect. Is they are two distinct, they are intertwined, but think about one and the other as you go through, and think of what's hitting your wallet share, right? Because it does matter. It's very admirable to save every single thing you can for retirement, but make sure you get to retirement and not have 30 years of stress on the way, right? Because you couldn't
Yeah,
afford, you couldn't afford the electric bill a couple months because of really terrible weather or whatever. So
wonderful. All right. Before I get to the final poll question, I'm going to launch that in a second. I'm going to throw out a question to both of you as we're nearing the end of today's session. Um, if you could go back in time, so we're going to go back in the Wayback Machine here and restart your financial planning, what is the one thing you would do differently?
all right, I'll go first because I'll let Gabe bring us home. For me, this is actually really easy for me. I wish I had contributed to a Roth IRA much earlier in my life. And just high level, Roth IRAs are post-tax dollars, right? So that after everything comes out of your paycheck and everything, whatever you get to take home, pay for your expenses, that's how you fund a Roth. They're very limited in the amounts that you can put in. There are some catch-up limits above age 50, I think. But there's a lot of benefits for the Roth, not the least of which is just diversification of your investments, right? Pre-tax versus post-tax dollars, et cetera. But to the question that you asked earlier, Doug, one of the good benefits of Roth is you can attach to that a little bit earlier in your life, and sometimes with hardships, you can get access to that money earlier, and there's usually no penalty for that. So it is kind of like cash sitting out there that is growing and at a non-tax basis, and it is a little bit more. It's not as liquid as cash, but it's much more liquid than your 401k or your TSP or whatever else, and it's tax free when you take it out. So that's for me. That's
Yeah,
just
I would definitely say that exact almost the exact same thing. I
really.
mean, the Roth IRA is any adult's best friend, going forward, whether it be, access to an emergency fund of a couple $1,000s of sorts, that year, or I mean, maybe even a backdoor Roth IRA down the road, like taking some of your 401k 10 years out from retirement and putting it into a couple different Roths, right? There's a lot of different things that you can do to that Roth IRA that can benefit you. It can benefit your children. It can benefit really anybody that is in and around your lifestyle, right? Especially when it comes to, trusts and wills and things like that. I would definitely start earlier. I would definitely not be hesitant to, hey, I know I'm only a 22-year-old, college graduate. I can't afford $20 a month into this 401k because I'm still trying to get my first house or apartment. Yes, you can. Yes, you can make it happen.
Yeah. Good point.
That would probably be my first.
Awesome advice. Awesome advice. We have a little time, so I'm going to go through some of these questions here. I apologize in advance if we can't get to everyone. But speaking of Roth IRAs, someone has a question on guidance of what percentage of your money should be in a Roth IRA. I don't know why I can't say that when you retire. Is there any guidance there?
Um, quite honestly, to me, as much as possible, right? Because the Roth has the only drawback to the Roth is its post-tax dollars, right? And there's a limit. It's a very lower limit to what you can put in annually. Those are the only two drawbacks, with the biggest one being its post-tax dollars, right? It's literally money out of your wallet that maybe you'd go out and have a nice dinner with or whatever. So to me, there is no limit to the cap that you should have in Roth. You would want that to be the biggest one because you're going to be able to withdraw that tax free later on in life. And no matter what your tax status would be, if you're going to be in a higher bracket than you are now or a lower bracket than you are now, to me, as much as in your Roth, then I'll pat you on the back, and I'll buy you the soda at the bar, then say congratulations on that. That's where it comes from for me. What do you think, Gabe? I think you're on mute again.
Swear, every time. No, I agree. With what you were saying there. I think that it's financial literacy around this is something that isn't touched on as much as personally I think should be. I think the literacy around what you can do with your finances and how you can set it up. It's not, you can have an intricate setup to your financial plan and not be a millionaire, and it can work for you. Don't shy away from something that has historically been told to us that is only for the wealthy individuals of the world. It is absolutely not, because I mean, when it comes to making every dollar count, arguably that's who needs it the most, is individuals who are not the top 1%, right? So there's so many reasons to do as opposed to reasons to not.
Makes perfect sense. I have one final question, then I'm gonna have to close this out. It's a little timely, and I think we touched upon it earlier, but just want to reiterate because it might be on the minds of a lot of people. And the question is, does it make sense for a federal employee that is currently furloughed to make any changes to their TSP allocations during this time?
Um, I let me preface this by saying I don't believe there's any negative implications to doing that, but you may want to double check that. But I can't foresee any rules that'll be in place. But I'm also not a true expert on TSP, so double check that. Having said that, I can't I would say this might be the best time because I don't want to make light of this, but if you are not at work, you probably have a little bit more time on your hands right now. So this might be the ideal time to think about your financial wellness, that Gabe and I have been talking about. And let me, what could be the right solution for me? So I think it's a great time and opportunity to really look at what you have, look at, the risk versus reward of each of these funds. Don't hold me to it, but I don't believe there's any drawback with making adjustments during this time period, other than you may not have access to some of these programs right now. I don't know that for sure. I know there's limits on what federal employees can and can't do, especially with their work computers and things of that nature. But I can't think of a reason why it wouldn't be a good time to review it at a minimum, and then if there's no place that's going to give you a penalty, then making changes now is a great opportunity while maybe your head is a little more clear and you are focused on your financial wellness.
All right. Well, gentlemen, thank you so much for today's informational session. I think we covered a lot of areas. Really appreciate it on behalf of the audience. For the folks that sat through this session, it was awesome. We had well over 100 people here today. Your comments, your discussions. I'm trying to follow the chat as best I can. Lots of just great advice and sharing of best practices too within the chat. So thank you to the government community. We have a full day ahead of us. Before we leave, I'd like to thank our next gen sponsors, WAEPA, Pluralsight, Code for American National Association of Government Communicators. Let me look at my closing notes because I think I have an announcement I need to make. A few reminders. Don't forget to fill out your CPE evaluation form to get your credit. Thank you for participating in the polls. If you haven't already, head over to the exhibit hall to check out our amazing booths. They're filled with additional information and resources. And then our lunch keynote is at 12:30. And you can access the sessions at the sessions tab in the main environment. Again, thank you everybody for choosing to spend your day with us. Gabe, Tony, thank you again. I hope the rest of the day was as informative as this session. Again, we realize you have a lot going on. If you can't make every session, that's okay. We're going to be recording it. You're going to get emails to the archives. I hope you can spend the day with us. Thanks so much. Let's have a great day and let's keep helping one another. Thanks, everybody.